Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com looks at the big meltdown on the major markets. He says even the so-called FANGs had their teeth pulled during the week. ButlerResearch.com founder Ted Butler takes a close look at gold and especially silver. The Corbett Report's James Corbett talks to us from Japan, where he examines the impact of the coronavirus and what's happening with China's economy. Could China's heavy-handed reaction to the virus cause the Hong Kong uprising to spread to the mainland? Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Cyprus Development corporate consultant Don Mosher. We'll talk to Ross Clark right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Well, I'm just trying to catch my breath here, Jim.
Pretty interesting week, as some people might say.
Yes. There's always going to be an excuse for the markets to reverse off of extremes, and there's no question at all that once everybody stopped talking about the election in the U.S. and the Democrats about Trump, the new topic became the coronavirus and the spread that is happening. But boy, it's still, when you think about it, this is just moving at a snail's pace with the number of people that are currently with the virus. But these things they expand at a rate that nobody knows where the end of it will be. So with uncertainty, that's what creates the kind of market break we've got. And, I'd be shocked. They're talking like the Fed might, high probability that they'll drop interest rates by a quarter, maybe a half a point next month. I mean, this doesn't really matter. And the whole question is about, the economic conditions and whether you can produce product and get it moving around the world.
The FANGs, did they get their teeth pulled during this big plunge?
Pretty much everything did. And, I take a look at, as an example, here's Apple. Closed the week, traded down to $260. So it gave back 38% of its rally from December of 2018. And we all remember how bad December was into December of 18. So out of that depressed low into a major high, gives it all back, or gives 38% of it back in just, 7 or 8 trading days. Microsoft, the same type of thing, and the NASDAQ, the Qs, which had generated for us upside exhaustion readings just 10 days ago, ended up down now at the end of the week with a capitulation reading. So we've gone from one extreme to the other in very, very short time span. It was just 5 weeks ago when we first started to see the signs of the rolling aspect as far as the market was concerned. The S&P and Dow closed down below their 10-day moving averages. Then they went back to retest the highs. Dow just moving fractionally above it. The S&P doing a little bit better, but the participation in the move, when you look at the transports and the Russell, it just wasn't there. And we had recommended June put options in the SPDR and in the Qs at that point. And as of the end of this week, these things, you could have bought the S&P options between $3 and $5. They closed off the week at 22, having peaked at 25. So, you buy insurance when it's cheap, not when your house is burning, and as it has been the last couple of days. So it's a matter of being out there and trying to be an opportunist at times when things are quiet, and then look at opportunities on the other side when they get volatile, such as they ended up at the end of this week.
How did gold react to this meltdown?
Well, gold had its classic type of move. Every time you get a crisis, whether it's a financial item such as, you go back to 9/11, or you go back to the 1987 crack in the market, these things that come quickly, sort of out of the blue, the black swan effects, those you see an immediate short-term bid into safe havens, with bonds and gold being in that list. So gold ran to $1,690 on Monday morning, as things were really starting to start to be unglued as far as the equity markets were concerned. I thought we'd have stayed up a little bit longer, but in reality, once you have that buy on the news scenario at the end of something that was already rallying, like gold, it tends to give up ground. So by the time we closed off the week, gold just got absolutely hammered. So at this point, we're 1581 at the end of the week. It's going to have to hold at the 1550 level. That's a really critical support level. If it doesn't do that, I would be fairly concerned about it. The market that has been hit far worse is silver. It had been up, challenging last year's highs, up around 1875. Closed the week back at the lows of the year at 1661. Well, actually, the lows of November, December. So anything on the that's got an industrial component to it, which is more silver than you would see in gold, has really taken it on the nose. So now, when we look at the style of break we've seen through the week, and the bounces in the equity market, it's really interesting. In our presidential cycle that we looked at, the objective here was to see a break into February, March. The depth of that was going to be questionable. But when we look back at the last dozen or so of these election years, once you start to roll over, the rallies typically only retrace have Fibonacci retracements, either 23.6% or 38%. And through this week, the early rallies, the midday rallies as we came down Wednesday, Thursday, were coming just back the 23% each time. So that's the type of thing you see in a market that's really in a rout type of condition. We saw that in crude oil coming off the 2008 high. So as we've been coming down here, this route that we've been into has the classic signs like we saw in crude oil, where you're just getting these 23% retracement rallies. We're probably due right now, after some capitulation, to see more of a 38% style of corrective rally. But down the whole overview would be that having rolled off the top, it should take roughly 30 trading days before we've had a low and then a tested low from which you can have any kind of a sustained move to the upside. So for investors, think about doing your homework in terms of where you want to be, which stocks, but don't be in a rush to put them on. I think you want to be looking out there the better part of, as I say, 30 trading days before you really put some serious money to play.
Ross, thank you so much for being on This Week in Money.
It was quite the week, and let's see how next week unfolds.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Ted Butler next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Ted Butler. He's the founder of Butler Research, LLC, online at butlerresearch.com. He's speaking to us from Florida. Ted, welcome back to This Week in Money.
Thanks for having me, Jim.
Ted, first of all, how are things going at Butler Research?
No complaints. I'm very lucky to be able to write what I want to write and be supported by subscribers. So it's a perfect world.
Do gold and silver look like they're poised to launch higher?
I would say that's an understatement. Every market has risks, so there can be sell-offs at any time. But the structure of these markets, particularly in silver, suggests that they're going to be silver prices be much higher before long.
Is the commitment of traders a good indicator of what's happening in gold and silver?
I think it's the best indicator. I don't know what the second best indicator would be other than price. But the commitment of traders gives you the breakdown of who's long, who's short, and a wealth of information that I don't think is replicated anyplace else. So I think it doesn't tell you exactly what's going to happen next week necessarily, but it explains better what has happened and what is likely to happen better than any other indicator that I'm aware of.
Are there any signs the silver price could benefit from a short squeeze?
Well, that's an understatement. Yeah, I mean, silver does have, in some measures, important objective measures, the highest short position, largest short position of any commodity, of any market. And having that large short position, a short squeeze is more likely to be profound in silver than any other market.
Is there a growing awareness of the manipulation in the gold and silver markets?
I think so. There's more talk about it, but on both sides. There's people that still deny it, but the level of discourse has risen to where it's. I don't see anybody talking about a manipulation in soybeans or in cocoa or other markets. It seems to be if you're talking about manipulation, it's mostly centered on gold and silver, so I'd have to answer your question in the affirmative.
Are gold and silver seasonalities a result of long-term market manipulation?
Well, I'm not so sure about the seasonality angle of it. I mean, they're not crops that come in a certain time of the year and are harvested. I've never quite understand the seasonality of argument or premise for prices, so I'll take a pass on that one.
Are they what they are calling seasonalities the result of long-term market manipulation, maybe?
I think past price performance is strictly the result of market manipulation, so in that sense, yes.
Is the silver market manipulated more than gold?
The silver market is manipulated more than any other market. It's in a class by itself. I mean, it's one thing to say a market or silver is manipulated. It's another thing to prove it and to provide evidence that that's the case. In the silver market, it's relatively easy. We get bona fide data from the U.S. government in the form of the weekly Commitment of Traders report that show that the concentrated short position in silver is greater than, and has been mostly greater than 99% of the time over the last 30 years, greater than the concentrated short position in any other market. And concentration is the number one definition of whether a market is manipulated or not, and silver having the largest concentrated short position in terms of real-world production, consumption, and stockpiles, silver is off the charts. I mean, there's no comparison between gold. I mean, the short position in silver, relatively speaking, and normalized, is many times greater than the concentrated short position in gold, even though the gold concentrated short position is the primary evidence of that gold is manipulated as well. It's just that on a relative basis, silver is much more manipulated.
In the late 70s, the Hunt brothers tried to corner the silver market, and I still remember their photo in Time magazine riding their two 300-pound twins, and they're riding mini bikes. The image just stuck in my mind somehow. Is anyone...
You know, I don't remember that one. I do remember a lot of press about including a great article in National Geographic at the time. But if the question is, is anybody trying to corner the silver market now? That's why you're bringing it up. Well, then the answer is definitely yes. They're not trying to corner the market. One entity has cornered the silver market. This entity has also cornered the gold market as well, and the entity of which I speak is the big American bank, J.P. Morgan. They have accumulated maybe 8 times as much silver as the Hunt brothers, physical silver, than the Hunt brothers ever owned or accumulated. They've also, J.P. Morgan has also accumulated a massive amount of gold, actually more gold than silver in dollar terms, but in terms of ounces, I think the J.P. Morgan has at least 900 million ounces of physical silver and about 25 million ounces of physical gold. They've done it, unlike the Hunt brothers, they've done it, instead of the upside in price, they've done it to the downside over the last 9 years. And the way they did it, again, unlike the Hunt brothers, is that J.P. Morgan, for most of the last decade, has been the biggest COMEX paper short seller in COMEX gold and silver futures, thereby depressing the price, and have used the depressed price that they created to pick up gold and physical gold and silver on the cheap. So, I don't think they're trying to corner the market. I think they've already accomplished it.
Is such a monopoly or manipulation legal?
Not according to accepted law, antitrust, and otherwise. The problem is that those in charge of enforcing the laws, such as the CFTC and the Department of Justice, who happen to be after J.P. Morgan currently for related things, but not the heart of the manipulation. Yeah, if the regulators don't enforce the laws and go after anybody like J.P. Morgan, who I allege quite openly has manipulated this market, then it's like a tree falling in the forest doesn't make a sound. I mean, without the regulators and those in charge enforcing the law, then the criminals like J.P. Morgan get away with it. So if you're asking me, is it against the law? Yeah. If you're asking me if the law is being enforced, hell no.
Yeah, so the police along the highway haven't turned on the radar guns.
Absolutely.
We'll have more with Ted Butler when This Week in Money returns.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Ted Butler. Ted, do you have silver price targets, and could silver explode to the upside?
Answering it in reverse order, yeah, it's just a matter of time before silver explodes to the upside, just like it's done in the past. When it makes a move, it rests for a very long time as it's basically manipulated, and every once in a while it'll shoot up. It shot up twice to $50, so that's a reasonable target, but I think it goes, much more than that. As far as price targets, if we ever bust this manipulation, and I don't think it's the regulators that are going to do it. I think it'll be, free market forces that'll force it. But when it does bust, what type to the upside, what type of price targets, that you start sounding crazy. The numbers can be so high, but suffice it to say, at least to the $50 level, which we've been at a couple of times before, I think this time when it does it, it'll go, perhaps a multiples of the $50.
Yeah, I was just going to ask, back in the 1980, silver did hit $50 an ounce, which, considering how much money people weren't making at the time, seemed incredible. What would $50 an ounce back in 1980 be the equivalent of today?
I don't have the answer offhand, but I mean there is a formula, the inflation-adjusted price, et cetera, and I would be surprised if it wasn't in excess of $250 or $300, and it might even be more than that. What was an average house and car priced at in 1980 versus what they're priced at now? And again, you were measuring, silver from the high point in 1980, but where the high point could be the next time, I think is a fair measurement. It'd have to be, 10 times or more.
Well, back then I bought my Honda Civic for $5,000. So, look at what a Honda Civic costs now.
There you go. I mean, that's a pretty, and if you look at a house, I think it was in the, depending on a regular house, the $20,000, $30,000 mark, it's got to be, obviously 10 times or more that amount now. So the same reasoning would apply.
Sure. And in Vancouver, that would be $1 million.
Okay. There you go.
Is silver likely to see more volatility than gold going forward?
When the death grip of the big short sellers breaks, and it'll break someday, then there's no question that the price of silver will be much more volatile than gold. It's a smaller market. It takes less money to move it. Historically, it's always been more volatile than gold. Not recently, perhaps. But the explanation for why silver hasn't been more volatile recently has to do with the manipulation again. So it's all tied in. If you break the back, if somebody can force these 7 or 8 big short sellers on the COMEX to lighten up from their death grip on the price, then there's no question that the price will soar. Volatility will expand, and people will see the true value of silver without the artificial restraint of these 7 or 8, mostly banks, U.S. and foreign banks, who are just basically criminally manipulating the price. Silver has the largest short position of anything in the world. It's about the cheapest thing in the world on a relative basis. It's as cheap as it was to gold than any time if you're looking for a reason why silver's so cheap, it's the big crooked short position on the COMEX. And if you're looking for where it will go, you can only see that after that illegal short, concentrated short position is broken.
Are we likely to see the gold-silver ratio narrow soon?
Well, soon, it should, but instead it's widening. It's over, 90 to 1, which is approaching the highest it's ever been in history. I think 100 to 1, very briefly. I can't say when it will tighten. I will say that when it does tighten significantly, it's likely to be very quick. It's like the tightening process, silver going up in price relative to gold. And I'm not negative to gold. It's just that silver is so much more artificially depressed than gold is, that when that, again, the manipulative grip on prices is broken, it'll be shocking how high silver will go. In fact, I had a subscriber make a very cogent comment the other day. He's bullishly inclined towards gold and wants to buy gold, and he asked me what I thought about buying silver instead now, okay, because it's so cheap relative to gold, and then when the ratio tightens in, to get back into gold using the proceeds of what he's made on silver. And it's a brilliant idea. It's like you could buy, if you have a little bit of foresight, you can buy gold at a substantial discount by buying silver now and switching to gold later on is one way to look at it. And I'm not, again, opposed to gold going up in price. It's just that when silver goes, it's going to go like nothing else.
In the past, what's the gold-silver ratio been when silver topped?
Well, when it topped back in 1980, the ratio was around 15 to 1, as I recall. In 2011, when it hit $50 again, the ratio got to be in the low 30s. So now we're over 90. There's a lot of room on the ratio. I mean, it can certainly come down to 40 or 50 to 1, which would be a phenomenal percentage increase in silver relative to gold, but I think it could go much lower than that. I think when this thing does blow off and it goes to levels that people won't believe, today, the ratio will probably be back in the low double digits, and it's when, who knows? I mean, it's a function of when the death grip of the manipulation is ended, and as time goes on, it is more reason to believe that that's going to happen as more people become aware of it. Nobody can justify having a massive concentrated short position on silver at current levels. It's stupid. It's like there's nothing sensible about it at all. And as more people realize this is the reason that silver is so cheap, they're likely to go against these big short speculators, and they'll get broken sooner or later. I wish I could tell you when. I can't. I can tell you it's not going to last forever.
Now, you'll recall back in mid-December 2016, Bitcoin hit $20,000. Does it make sense for Bitcoin to be worth more than gold and silver?
Not to me. I'm not at all an expert on Bitcoin, but the history of silver and gold, go back, thousands of years, and to think that they would be, silver in particular, so priced so cheaply compared to other assets in the world, not just Bitcoin, but stocks and bonds and real estate. It doesn't make much sense. People should be groping for a reason. If you think silver is cheap, as I do, you should be looking for a reason why it's so cheap. And the only reason I've been able to uncover, and I've been studying this now for 35 years, is this concentrated short position on the COMEX. It's the only thing that explains why silver would be so disproportionately undervalued, not just from a regular absolute price level, but relative to other things like gold. It's the most obvious example in the world. Why is silver so cheap relative to gold? Are we using less of it? No. Do we have less money in the world to go into it? No. There has to be a reason why silver is so cheap, and I defy anybody, challenge anybody to come up with a better reason for why it's so cheap than this concentrated short position on the COMEX. And it's good luck if you can find it. I'd love to hear it, but I'm absolutely certain that this is the only reason that silver is as cheap as it is.
Is gold a measure of the real rate of inflation?
In some senses, I suppose. I mean, but the real measure of inflation is whatever the loss in purchasing power of the local currency might be. So that's probably the truest indicator of inflation. But I wouldn't be surprised to see that gold has pretty much told the tale of inflation. Not so much in silver because of this really artificial price suppression, but between gold or the loss of purchasing power is probably the best measure of inflation.
How big is the silver market as a precious metal versus as an industrial metal?
Well, it's tiny. Its total production of silver is like, 17, $1 billion a year or something like that, whereas gold is like 10 times as much. But in terms of what's left over after all the silver that's produced each year, new silver taken from the ground, once you subtract the obvious industrial usage that has to be met, there's so little left over, 50, 100 million ounces, that it's just such a tiny amount of silver that's available each year for investment that any move towards investors coming into silver will just blow the price sky high for the very reason that you brought it up. Silver is so tiny. One of the reasons it's tiny in terms of total value of what's produced is because of the manipulation. It all goes back to this depressed price, and that's not natural. It will be rectified in time. It's not 7 or 8 big traders, big banks controlling the price of silver is not going to last forever. It's lasted for a very long time, but it's not going to last forever, especially as people become aware of it.
Should the U.S. dollar be backed by gold or silver?
Geez, I don't see how. Certainly, I don't know how you could do it with silver. It's like there's just not enough of it compared to all the the dollars in the world. Plus, a true gold or silver standard would require a free convertibility of metal into dollars, and no government is going to do that. So the odds of some type of gold, and even less for in the case of silver standard, I don't think is plausible.
Over the last 5 or 6 years, China and Russia have been snapping up every piece of gold they can find. Are they going to continue to do that, and why are they doing that?
Good question. I mean, they have been. There's no question about it. Whether, what the reasons are, I guess are open for debate, but I don't think it's open for debate that they have been doing it, and I don't think it's open for debate that they're likely to continue to do that. They haven't done so on silver. I think that could be the big surprise. They might turn their attention to silver because of not just value standards as an investment holding, but as a vital industrial commodity. You get that kicker with silver, that not only is it an asset that has no counterparty risk, it is also a vital industrial asset and strategic. So, that could be the big surprise. I wouldn't expect them to stop buying gold. I perhaps would expect them to start buying silver. I don't know why they haven't.
How do gold and silver ETFs affect the gold and silver markets?
Absolutely. Not in ways that most people would typically expect, however. The price of gold and silver are set and determined on the COMEX. That's the biggest derivatives exchange in the world, and that's what determines what the price is. At times like recently, the last 9 months or so, where gold prices have gone up, for instance, pretty dramatically because of futures market positioning on the COMEX, which is measured in the Commitment of Traders report, the price going up attracts outside investors. And outside investors, people with stock brokerage accounts, looking to participate in any market that goes higher, are buying the gold and silver ETFs. And when they buy these gold and silver ETFs, there's provisions, automatic provisions, in the prospectus of these ETFs that new investment coming into these ETFs must be backed by a formula, a certain amount of physical gold and silver. So the kicker is, when prices go up as they have, and people buy these ETFs to make money on the share prices going up, whether the investors know it or not, they are buying physical gold and silver because the trust themselves, the ETF themselves, are bound and are mandated to have enough the physical metal in the trust to back the shares. It's a self-reinforcing. It's a vicious cycle in that as new money, as the price goes up, set on the COMEX, and people start to buy the ETFs because their price is going up, more new physical metal is being bought, and that just accentuates, tightens the supply, the real supply-demand situation, and accentuates even higher prices. So it's a virtuous circle in which it's kicked off on the COMEX. That determines the price, and then the other stuff follows.
If you were given $1 million today to invest, where would you put it?
Well, that's a loaded question. It would be mostly silver, and I don't know what else. Maybe keep some cash in reserve if the crooks on the COMEX drive it even lower to buy more then. So I'm a all-in kind of guy on silver.
Do you have any silver wisdom you can leave us with?
It's got the best risk-reward ratio around. I mean, every market has a risk of some type, okay? In silver, it's hard for me to envision it having a more than a $2 risk to the downside here in a kind of worst case scenario. I'm not even expecting that, but we'll exceed. Every market has a risk. So maybe silver can go down $2 in a worst case scenario, or a near worst case scenario. But on the upside, as we talked before, go 50, 100, some crazy numbers to the upside. That $2 risk versus a $50 or $100 profit potential is such an attractive risk-reward ratio that I don't think you could find it in any other type item. I'm not talking about a penny stock that's inherently risky and inherently has a lot of profit potential. But this is a commodity that's not going to disappear. It's been around for thousands of years. It's going to be around for thousands of years after we're gone. And to have that kind of a risk-reward ratio, you can't find it anyplace else.
Ted, how can people find out more about your newsletter?
Simple. Just go to Google and look up butlerresearch.com. There's a whole bunch of free articles there. There's free articles floating around the internet to occupy anybody's time.
Ted, thank you so much for being on This Week in Money.
Thank you, Jim. You take care.
My guest has been Ted Butler, founder of Butler Research, LLC, online at butlerresearch.com. He was speaking to us from Florida. Coming up, James Corbett reports from Japan.
Cyprus Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cyprus Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with James Corbett, publisher of the Corbett Report. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to This Week in Money, James.
Yeah, good to be back on the program. How are things in my home and native land?
Well, confused as usual. Native blockades on our railways and blocking the streets of Vancouver, and right across the country protesting natural gas pipelines that the local natives have approved, but somehow they've taken up a cause from hereditary chiefs who failed to win election in their local band councils. That's what's happening in Canada. So glad I could spread good news your way. Now, James, the coronavirus, we're hearing it's a pandemic in the making, and it's also, we're here that it's just pneumonia with a propaganda fear campaign focusing on it. What are you hearing and experiencing?
I am hearing both, and here's the interesting thing. I guess both things could be true, because even if it is a actual pandemic virus, it still could be no worse than just common pneumonia, and could be causing a fear and propaganda campaign that may actually be worse than the disease itself. To be fair, I don't trust any of the numbers or stats that we're getting from any of the lying governments that lie all the time about everything. So I don't trust necessarily anything from that regard. But if I were to go based on my own personal experience of what I am experiencing here day to day in Japan, absolutely nothing whatsoever, at least in the streets of the city where I am, absolutely nothing. But of course, the fear is everywhere, and it's all over the news, and we're being told now. In fact, the latest word is that Japan is canceling some sport and cultural events. Even the Tokyo Yomiuri Giants baseball team is apparently going to be playing a couple of its preseason games to completely empty stadiums to minimize the transmission of the virus. I mean, some pretty drastic steps considering, of course, Tokyo 2020, the July Olympic Games, is just a few months away, and they're already starting to cancel events and things. Are the Olympics going to happen? Who knows at this point? All I know is there is certainly a lot of fear and panic going around about a virus that seems, from what we know, and again, don't trust any of the lying numbers from the lying governments, but it seems like it is mostly the people who are dying tend to be 70, 80 plus years old. It doesn't tend to be affecting young, healthy adults or children at all.
And I've also heard it's smokers that it's hitting. So if you've smoked all your life, you're setting yourself up for a bad illness anyway.
Yeah. And again, I'm certainly not a medical professional, so don't be taking any medical advice from me. All I know is personally, I am not worried that I'm going to die from coronavirus, but I am very worried about the types of steps that a lot of governments, including the Japanese and the Chinese and governments around the world, are taking right now to crack down on this virus.
And of course, I've heard the conspiracy theory, Wuhan being where China has its biological weapons center, perhaps this was released as a way to quell the riots in Hong Kong.
Well, it is not a theory that the BSL-4, the Biosafety Laboratory for Level 4 security lab, is 200 meters from the wet market where supposedly they at least first were saying that this virus is from, although there have been spreaders who had no connection to that market. So again, there's clearly reason to be quite suspicious about where this came from. But even, as I say, even regardless, even if it is a pandemic virus, I think the steps that China and other countries are now taking to try to quarantine millions of people and literally barricading people in their apartments and using drones to make sure everyone's wearing their masks and all sorts of craziness, that to me is really going to be the long-lasting effects of what's happening here.
Over the next few weeks, how do you think markets around the world will react to this virus?
Even more important than the next few weeks, I would say the next several months timeline. I think people, maybe people are starting to get the idea, but I don't think people have fully priced in the incredible effects that this is going to have on the global economy. And we're already starting to see that, but it literally has not gone its way through the supply chain yet. Obviously, so much production and manufacturing have been outsourced to China over the past couple of decades that a disruption on this scale, quarantining millions of people, shutting down entire areas of the country, basically bringing production to a standstill, is already starting to have dramatic effects. For example, of course, oil prices are way down based on a severe drop in demand, so that now China is trying to sell its fuel outside of the country because there isn't even demand for it domestically. It's just one way of getting an indicator on what's coming. And of course, car manufacturing, smartphones, all these types of things that involve just-in-time delivery on global supply chains are going to be severely disrupted from this. The economic effects of this are going to be in the untold billions upon billions of dollars, and I don't think the markets have really priced that in fully yet.
What kind of shape was China's economy in prior to the virus?
Not great shape, of course. So we have seen the general slowdown of the Chinese economy over the last several years, with, of course, ups and downs along that path. But clearly, this is a huge disruption of the overall narrative, which was that China was going to start trying to create more domestic demand and move away from being simply a manufacturer for other people's products and becoming more of a exporter of their own products and that sort of thing. That, of course, is definitely in question now that this type of disruption has taken place and has derailed a lot of those plans. So now we're seeing the Chinese government's trying to essentially monetize vast amounts of debt to try to keep things papered over in their economy, but that probably will not last, assuming that this crisis, or at least the crisis response, lasts for much longer than it already has.
Where do you see China's economy going from here?
I cannot see anything positive coming from this in the foreseeable future. They're already estimating that GDP growth in the first quarter will be 0. And one can imagine it will dip into the negatives as time moves on, assuming that there is not some drastic change in the situation where the entire virus phenomenon and all the panic and hype surrounding it disappeared overnight. In that case, perhaps this would just be a bump in the road, a significant bump, but just a bump in the road. But assuming that things continue unfolding in some sort of crisis mode, there's just no way that the Chinese economy could recover from this year. And I'm thinking this will probably have effects into years to come as well. Again, I don't think the markets have really priced this in.
Following President Trump's to India meeting with Prime Minister Modi, are you bullish on India?
I suppose India has, for decades really, been positioned as the sort of alternative to China in the rising East, broadly defined and generally speaking. And that's why, of course, a couple of years ago, the U.S. State Department tried to rebrand the Asia-Pacific into the Indo-Pacific to try to say we're putting our eggs in the Indian basket. So from that perspective, I guess there would be reasons to be bullish, generally speaking, on India, and especially if there's major disruptions in China and more companies are seeing, well, even if coronavirus disappeared overnight, there would still be serious questions. Do we really want all our manufacturing outsourced to China? Maybe India would be a more attractive investment in that case. And, oh, look, these relations are forming and strengthening here. So maybe that means there will be some more investment. But overall, I think that the way that the Modi government has been handling itself and its population leaves a lot to be desired. So not only would it be morally, I think, bankrupt to be investing in India right now, but I think there will be significant reaction to the types of moves that Modi has been making to annex Kashmir, for example, or some of the census and population control measures and the internet crackdowns that have been going on. I think there will be some political backlash from this that will destabilize those markets that people are looking to invest into. And of course, as always, there's the underlying problems with the Indian economy, the red tape and bureaucracy, which is not likely to vanish overnight. That has always been a disincentive for international investment.
Does India sort of stand up? I heard the line, India's big advantage is that it's a democracy. India's big disadvantage is it's a democracy.
Yeah. Yeah, something along those lines. Yeah, obviously a democracy of 1 billion people is not going to be a very unified voice on anything. And when it is a unified voice, it will likely be along extremely fervently nationalist and populist lines, like, for example, Hindus versus Muslims, which, of course, is not going to be, I think, a steady and healthy way for growing the Indian economy, let alone the Indian body politic in the near future. So, yeah, there are deep divisions within Indian society and lots of cantankerous debate that goes on, to be fair, which is probably better than a Chinese system where there is one voice, an authoritarian voice that tells the public what to do. But, yes, it doesn't mean it's a stable and happy environment that investors would be looking for, I think.
We'll have more with James Corbett right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with James Corbett. James, do you think President Trump is punishing China for intellectual property theft and for trying to buy U.S. politicians at all levels of government?
Well, those are the ostensible reasons that have been given, at any rate, for the targeting of China. But we know that the Trump administration has been in the bag for this war with China, economic war, since it came into office, and the appointment of a lot of China hawks immediately upon Trump's taking office. So this shouldn't be surprising. And, of course, whatever justification is given, I think it doesn't really matter what the Chinese do. The U.S. is going to attempt to get something out of it. But actually, a lot of it is bluster and hot air because, of course, the amazing trade deal that just came out and was solidified, or at least the first part of that trade deal, which was all hype and ballyhoo. And when you look at the actual details, there's really... in fact, it really just recovers the U.S. trading position with China that was in place at the start of this trade war spat that's going on, of course, minus the billions of dollars of trade that were hurt and hindered as a result of the spat in the first place. So really, there's a lot of bluster going on. The real question is what ace card is up the sleeve that's going to really solve this, or how this is going to be resolved in any sort of way. As I've said before, I think for the Chinese, again, with regards to this current bump in the road, shall we say, they're interested in playing the long game because Trump will be out of office one way or another, at least within 4 years, if not sooner. And Xi is president for life, so he can afford to play the long game and make sure that as long as he maintains things and keeps things going, then maybe the next president will be easier to deal with.
Could Hong Kong end up taking over China instead of China finally taking over Hong Kong completely?
Yeah. Well, that's an interesting way of putting it. And perhaps there is something to that, which is why there is so much heavy investment by the United States and others in NGOs and other groups that are organizing protests in Hong Kong, because, of course, that is the sort of the foot in the door towards destabilizing the Chinese government. So one could imagine why there's so much international interest in those protests, whereas, say, protests in France don't get anywhere near the attention and aren't seen as the will of the French people. So, yes, I think that is one way of looking at it. Hong Kong is sort of the thin edge of the wedge to try to essentially take over China. The trend has been in the opposite direction for a number of years, not only, of course, legally and formally that China actually took over control of some sort over the autonomous region of Hong Kong in 97, but also just everything is trending that way. The Chinese economy has been growing by leaps and bounds, and China has been opening its doors slightly to international capital inflows and outflows, and has been connecting in with the economy, so sort of usurping Hong Kong's place as China's financial window to the world. But again, given this destabilization that's happening right now, could the reverse process take place? Could Hong Kong be used as a sort of reverse channel to take over the Chinese government in a way, at least financially? Well, it's certainly that's an option or something that's in play right now. Although it is interesting, the Hong Kong protests, are they even still going on? You certainly wouldn't know it, given all the craziness that's happening in that region right now.
Where is international capital currently flowing?
Everywhere except, I think obviously right now there's going to be huge divergence away from China. That trend was already in place, actually, that we've seen more international capital flowing into Southeast Asia specifically as the sort of developing emerging market with the most promise, demographically speaking, as well as just financially and politically. Vietnam, for example, trying to step up and become more of that place for manufacturing than China, that China has been in the past couple of decades. Places like Vietnam, even Malaysia and other places trying to step up to that. And I think there will be more of a sort of Southeast Asian phenomenon in the years ahead, the decades ahead. But again, I think everything is in question right now, given these disruptions that are taking place and how that will affect the flow of international capital. At this precise moment, I think all capital, international and otherwise, is, I don't want to say circling the drain, at least holding back, shall we say, and seeing where things are going to go. I think we're in a holding pattern right now because there is so much disruption that's happening right now as a result of the virus panic.
What has caused the very vocal push for socialism around the world?
Around the world? I don't know. I might dispute that. I think certainly, obviously, in the United States, at least the word socialism has stopped having the immediate pushback, or even if that pushback is taking place, it's taking place less and less so in the younger demographics, and I think that's a significant move. Socialism, democratic socialism, at least in Europe and elsewhere, has been a norm for a very long time. So I think the real change is happening in the United States, and it's happening, I think, quite specifically because of the economic position that millennials and Generation Z have been placed in by the older generations. And I think that there is now some political pushback in that, taking the form that it generally does amongst younger people, as in socialism. The government will provide all the answers and will take care of everyone. One can imagine that, like most generations, as this millennial and Generation Z, as they age, they will probably turn away from their socialist leanings. But at any rate, that is capturing something in the zeitgeist right now. I think it is a demographic/economic phenomenon at this particular point. I still doubt that it has the pull to be able to, for example, put a Bernie Sanders in the White House over a Donald Trump. I don't believe that that's in the offing, but at least there is a change that's taking place right now, and it is significant. Is
the push by the powers that be for globalism failing?
In a sense, perhaps one could make that argument. Yes, globalism, I mean, as something like the disruption that's taking place right now around the virus panic is in every way an argument against the global supply chain as it has been developed, showing the vulnerability of such an idea and how a disruption anywhere in the world really can completely throw off the global economy should be a nail in the coffin for this idea that countries should be totally dependent on this international, global, just-in-time supply chain that is so vulnerable and frail. But in fact, I'm thinking it will actually push things in the opposite direction. No, you see, this is the reason why we need to be even more interconnected, so that there will be even more nodes in this global supply chain, so that if there is a disruption, say, in China, they won't throw everyone off. That's why we need even more tighter and more powerful international bodies, because there is essentially, this is an ideological fight. It isn't about rationality or looking at actual evidence. It is about the ideology that globalism is the answer to every possible problem. So if the problem gets worse, that means we need more globalism. So I think that the powers that be, as you say, will actually push these types of crises and the failings of globalism to push for more globalism, as backwards as that might seem.
Is political corruption around the world in the spotlight?
Yes, I think so. Clearly there is a growing distaste amongst the public for the political class and what they're doing. And there is, I think, a growing awareness of political corruption, and perhaps not a growing awareness, but at least it is easier to get certain stories out to the public in a more timely fashion than it was in previous decades and generations, where the only forms of media were newspaper and radio and television, and which were highly controlled and highly centralized. Now we have the internet, where everyone has an opinion, everyone has a voice, everyone can get information out instantaneously. So I think there are fundamental changes that are taking place, even in the form of media that is distributing information, that is highlighting and spotlighting political corruption. I don't know what actual political effect that is going to have, because most people just are only focusing on the political corruption of their political enemies and overlooking the political corruption that takes place in their own backyard. Was it ever thus? I mean, obviously, this is the way this functions. So ultimately, people are going to be looking for political solutions to the political problems and are going to find themselves in that tailspin. I don't know if this is going to be a sea change, but at any rate, I think there is more of a spotlight on political corruption now than there has existed in previous decades.
James, I know you have to run soon. Your thoughts on gold and silver?
Well, obviously, we've seen a run-up in gold as a result of the current crisis and panic, and obviously gold is always has for millennia been the store of value and the place that people go in times of crisis. Obviously, I think the greater the disruption to the global economy that's going to take place, the greater we will see the run-up in gold and silver. So I think it's a good investment, not necessarily just in terms of you will get more dollars at the end of this, but in terms of investing for the future and whatever system is going to result of the types of craziness and economic collapses and whatever else we may see in the future. And I'm not necessarily predicting that as a result of this virus panic, but this is the type of disruption to the global economy that really could trigger events that change things drastically. And gold and silver have always been good places to at least hold value in times of crisis.
James, thank you so much for being on This Week in Money.
Thank you for having me on. It's always a pleasure.
My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Ted Butler, and James Corbett. And thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howstreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Cyprus Development's Don Mosher. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Jim, I'll have to say this is a week of horror for guys like myself and investors in the market.
Yes, but of course optimism, I know, reigns around American Manganese, and you put out a news release today. What was in it?
Oh, we've been requested to do more testing for one of the Tier 1 companies, and this is to do with the producing the sulfate rather than the hydroxides. So we'll be doing separate lines on that, and but it's it shows their interest, and that's about all I can say right now because I've been optimistic too many times in the past, and I know what we've got, and I know we're solid, and that's good enough for me.
Larry, I mean, I keep hearing from around the world people are really concerned about what are they going to do with old lithium-ion batteries once electric cars become really popular. Does your company have the solution?
Well, we've got a closed-loop solution that is patented, Jim, and I'll go a little deeper on that. Certainly, I think we've got the best solution out there. We certainly tied up the best solution.
with our patents, and that's going to be, our strong point going ahead. So when the markets are bad like this and we get battered, I know that the company's got the fundamentals to make a comeback from that and to move on and hopefully to higher prices. So that said and done, there's a few things that are happening out there in the world that point that up. For example, there's a Korean company that was going to set up a recycling plant in New York at Endicott, and that was 2 years ago, and they got some grants and everything else, and now they're getting a lot of pushback from the stakeholders in the area. They want to know how this is going to affect the environment. Well, that's going to come up all over North America, and it'll certainly come up all over the world. We already seen how China has put some heavy restrictions on the amounts of cathode material that can be reclaimed from the spent batteries. So when you look at what's happening in Endicott, that's a symptom of what's going to happen everywhere. And we feel that's going to put us at a tremendous advantage. And that's because we do have this solution. We have a closed loop. We put nothing back into the environment. We can answer all the environmental questions when we go for our environmental permit. So, that puts us in front of a lot of companies that have partial solutions where they're going to have to deal with waste streams. And, we don't have to deal with that. So that's a big plus. And I think people will recognize that in the future because, as you know, the environmental aspects of everything are getting stronger and stronger and stronger, not weaker and weaker and weaker. So, we expect that will put us front and center in the crosshairs of some companies that want to do something about the environment or just want to get some recycling going. And that's great for us. Now, let's just talk about the market for a little bit. We're down 4,000 points, or are down 4,000 points today. In 5 days, we had one day when it went sideways. But most of the days it's down 1,000 points, down 1,000 this morning. And the venture exchange is back to its all-time lows in the last 10 years. And, it was beginning to take off. And the interesting thing is the last time I looked at gold, it was down $72, and that's a safe haven in these types of markets. And, that's what people, buy physical gold or gold projects and gold shares and to protect them in these kind of markets. But unfortunately, when these markets get pushed down as hard as they're being pushed down, and part of this, big part of this is artificial, and but they're being pushed down, and margin calls are coming in. So what do? You go to where you might have some liquidity, and certainly gold is liquid, whether it's in the physical form or it's in the form of a company's shares. So they get sold out. So you see that the second hit in the market is going to be the precious metal stocks, and we're seeing that now, and especially today. So we're back down in the 1500s, and it was headed for 1700 a couple of days ago, and now it's back down there. But again, that's a part of the market. Now, I've attached an article that says Trump should reinstate the uptick rule, stop shorting on the exchange. And I agree with that article because China has stopped it, and, because these predator traders destroy markets. That's how they make money. And, unfortunately, Trump hasn't made any move in that regard, but that's really not up to him. It's, he can put pressure on the SEC to either, stop shorting on the exchange and maybe reinstate the rule. And I won't even bother mentioning Canada doing that because everybody just seems to be oblivious that this is the happy hunting grounds for predator traders because there's no short rule whatsoever. And, they can just willy-nilly short stocks, and this certainly is a dream come true with this with the virus, the coronavirus. It's certainly given them an opportunity to exacerbate this plunge in the market. But like I was saying earlier, it's partially to do with the coronavirus. But when you add willy-nilly shorting in on top of that, then it gets four or five times worse than it would ordinarily have been on the drop in the market, because they can keep, the talking heads can keep pushing that out there. It seems like the free world is intent on destroying their economies. And, I know Trump's done a great job of increasing the economy of the U.S., but he's going to have to do something about this predator traders. And they're not all homegrown. They come from everywhere, from all over the place. They just come into the market and they short the stocks, and, and away you go down the hill. So the people should take a look at this market. Is similar to 2008, when the U.S. got rid of the short rule in 2007. The markets almost created a worldwide financial disaster, and if they hadn't gotten that turned around, it would have happened. But the interesting thing about that plunge in the market, that what we call a crash, and it was a crash, was V-shaped. It went down over a period of a few months, heavily went down, and then when it went back up over a few months in a V shape. So I see this one as being very similar, because it's artificial. It's artificial because it's the predator traders are making it look like everybody is running to the exits, but the truth is that they're taking advantage of a market that is falling. And so that's my look on the market. We should be, able to adjust to that. As time goes by, you'll start to see the market going up, and hopefully the U.S. will, impose at least a rule not that no shorting is allowed during this crisis. And because nobody can get back on their feet as long as you can just keep shorting the stocks. And unfortunately, in Canada, you don't have to own the stock. There's no law that says you have to borrow the stock. There's nothing out there. It's a Wild West up here. And I don't see the Canadians are intent on destroying the economies in Canada. And I don't see them doing anything to alleviate that. So we'll just go along based on our fundamentals of our company, which are stronger and stronger and stronger. And we'll survive this, Jim. It's a market that is affecting everybody. Battery production is down, so that leads to production of EV cars going down. That's a hit that you have to take, and that is probably more to do with the EV, with the coronavirus. So. I see an end to it all. I see a rapid recovery over a few months, and, that is my take on the market.
Larry, where are you traded, and how can people get more information about American Manganese?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. We're traded on the Frankfurt Exchange under the symbol 2AM. You can get all the information you need about the company at our website, which is very informative and transparent, at AmericanManganeseInc.com. You can phone the office here at 778-574-4444. Want to send me an email at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on February 28th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on howstreet.com.
I'm Jim Goddard. I'm speaking with Don Mosher, corporate consultant for Cyprus Development. Welcome back to the show, Don.
My pleasure, Jim.
Don, you've received some very positive news. Can you tell us about it?
Yeah, we've been working to publish a preliminary feasibility study on the Clayton Valley claystone deposit that we have. And we supplied NORAM Engineering in Vancouver with some solution that was produced from our claystones. And what they have done is now processed it to demonstrate that we can produce a commercial quality lithium carbonate hydroxide product that then goes for sale to the battery companies or whoever's going to buy it as an end user, for example. And what's really important about this is there is no commercial production of lithium from any claystone deposit in the world. There is a project a little north of us that's owned by Lithium Americas, and they're working towards feasibility on their stuff right now. So with the results that we've got this morning, we can confidently say that we now have a project that can produce commercial-grade lithium. We can start to look at moving forward to our feasibility study and building the plant. And I think this now puts the company into play with the big lithium producers in the world.
Where is this action taking place?
So we have a project in Nevada in the U.S., in Clayton Valley. The U.S. really has no lithium production at all to speak of. There is a small facility next door to us in Clayton Valley called Silver Peaks that's owned by Albemarle. So I would naturally assume they would have a very strong interest in what we're doing down there. And I think it makes this project incredibly valuable, being able to offer domestic supply of lithium to the U.S.
Where do you think this positive test result will lead to?
Well, as I said, it'll allow us now complete our pre-feasibility, publish that, then every producer of lithium in the world can take a look at it and start to make up their own mind if they want to take a run at Cypress. Like, Cypress is not going to be a company that ultimately goes out and raises $650 million and puts us into production. I think it's going to be a bigger player that comes in, ultimately takes the project off of Cypress's hands and does that construction work on it. But this tends to be the sweet spot to make money. It's been a credibility issue from day one. It's not that we don't have a massive quantity of claystone. The question has been, can anybody commercially produce lithium out of the claystones? This is very powerful evidence that yes, we can. And with the pre-feasibility, you'll have all the construction data in there as to where the plant's going to go, where the pit is, where the tailings are, what it's going to cost, how much acid consumption there's going to be, and the flow sheet from where you dig up the clay all the way through leaching it to finally producing this product that we have demonstrated with the news release today.
How important is it that this is happening in a very steady, solid geopolitical place, considering that even in Canada now we've had 3 weeks of blockades blocking our natural resources from getting around?
If I was an American company looking at electric vehicles or battery production, I would be absolutely ecstatic to find something in the United States with this kind of potential mine life and commercially viable prices. A brand new way of producing lithium that's never been done before. You know, not a spodumene, and not a brine with evaporation ponds like in Chile and Argentina and the Atacama Desert, or the big spodumines in Australia. You actually have a large claystone deposit located as a domestic supply for the U.S. I think it's incredibly exciting.
Is it also helpful Tesla's building that super battery plant that'll need lots of lithium?
There's a number of plants now on the drawing board. There's a $2.5 billion battery plant going into Ohio. You've got Tesla expanding with, I think Panasonic produces the Tesla batteries for the cars being built in Nevada. And I'm sure there's some others on the drawing board that I'm not aware of out there. So here's a supply, a secure supply for these guys to take a good look at. I think the play from here on out gets really exciting. It's been a credibility issue up till now, but with this data, because anybody can reproduce this data, it's scientific method, it becomes very exciting. I'm absolutely thrilled.
What kind of feedback have you heard from other sources about this so far?
You know, quite honestly, I've been so busy this morning, I really haven't had a chance to talk to a lot of people about this particular news release that's come out. I'm just giving you my own personal feelings on it. And I think right now the market's just scared. Like, you know, when you see the kind of correction we've seen in the Dow today, it's hard to get people to actually look at anything other than selling stock out there. So let us, you know, get this news out there, get it digested, and I'll start talking to people and try and get their attention on it right now. Everybody's attention today is focused on the big boards and what they're going to be doing and how widespread the coronavirus gets globally, I guess is the best way to put it. Nobody really cares about a mining deal today. But for me, looking forward, I am just absolutely ecstatic with what we've got here.
Don, can you give us a bit of background about Cyprus Development and where people can get more information about it?
We trade on the Toronto Venture Exchange under the symbol CYP. We trade down on the OTC board in the U.S. under CYP.V. And there is a Frankfurt listing, which is C1Z1. All our information is available online under CyprusDevelopmentCorp.com. And I'm easy enough to find, or, you know, it's easy enough to get hold of somebody within the company if you go into the contact page.
Don, thank you so much for the update.
Thank you, Jim. Have a good one.
My guest has been Don Mosher, corporate consultant for Cyprus Development. I'm Jim Goddard. Our conversation took place on February 27th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.